TLT stock. This is the ETF that trades off the long end of the yield curve, the 20 and the 30. And I use the 10-year, the 20-year, they kind of move hand in hand, although the numbers aren't exactly jiving right now. It seems the 10 years a little low. But when is it safe to finally buy into TLT stock? I've gotten a lot of people kind of send me messages via my forum on my website asking me the question, how much lower? And let's break that down. How much higher for longer? Will the Federal Reserve raise interest rates, and how does that affect the 20-year? And if you really kind of think through the process, yeah, we might see some interest rates increase in the short term, but eventually the Federal Reserve is going to lower interest rates. So how much lower will TLT stock move downward? And is it safe to start considering buying on these dips? I believe that we're probably going to see some movement up in TLT stock. We may have actually touched the bottom. I'm never one to try and catch a falling dagger. I think technical analysis is silly at best. I look at the basic fundamentals and ask the question, what would the next move be with the Federal Reserve? Because that's going to predict price movement. Let's jump in. I want to show you a couple charts on TLT stock and kind of break down what I'm broadly thinking on what will happen with interest rates in the next coming, say, 6 months, then 2 years, then 10 years. This will give you an idea as to the fact that maybe it is safe to buy TLT stock. If you're just finding my channel, I know that TLT stock is one of the video content that I was publishing on my original channel, and it was very popular. This is one of the reasons why I broke the channels out, because there was differentiation between cannabis stocks, my original channel, and this channel. That's why I've broken this kind of content out. Like and follow the button down below. Thanks so much. I know a lot of people like my opinion on this. As well, the descriptions down below, you'll find links to my other channels and my website, dhtayloranalysis.com, where you can find the link to get my free email newsletter. Every time I do content, I send out an email every day. Make sure you sign up. All right, this is the 10-year Treasury yield. And we might have topped right around 5% for now. We have continual new information coming. This week we get GDP. Now GDP did a pretty good job, solid, robust job of telling us that the economy is strong. Employment numbers tell us that the economy is strong. So the revision coming in this quarter is probably going to continue to tell us the economy is strong. That's not exactly good news if you're a Federal Reserve board chairman sitting there trying to keep inflation lower. The economy is too strong. Inflation is too sticky. We're at about 3%. We're probably one or two data releases from inflation numbers popping back up. We get PCE on Friday. So I think it's GDP on Thursday, PCE on Friday. This is a chock-a-block full of content for data points for the economy this week. Now the GDP is a revision. We get them 3 revisions per quarter. How much higher could the Federal Reserve push things? If we start to see inflation trickling higher, the Federal Reserve may go 25 basis points, 50 basis points, maybe 75 basis points from this point, and then kind of mellow things out. They'll want to wait to see how this affects things. So when you're thinking about TLT stock, and let me push forward to a chart here. This is TLT stock. It's really bottomed out over the past, say, since July, dropping well below 100. It was about 105, dropping all the way down, hitting 82. That's a 20% drop, 25% drop, depending on where you start, your starting point is. But the era of loose money is behind us. That loose money pushed yields as low as they could, and because yields on bonds were so low, yields on stocks were so low, that's what pushed the stock market as high as it was. You have all this liquidity. Companies were able to do things very inexpensively. The reverse has now happened. And so people are scrambling to answer the question, what about the stock market? When does it go up? Well, we start with interest rates. That yield is really what kind of drags things. If the Federal Reserve were to move interest rates on a short-term basis right now, let's say they did 3 consecutive 25 basis point hikes, this would greatly affect the the 2-year yield on the Treasury. But within 2 years, the Federal Reserve will probably back that right back out. So any moves on the Federal Reserve right now would be short term. It would affect the 2-year. It wouldn't really necessarily affect the 10-year as much, but it would affect the 10-year. Because within the next 10 years, within 2 years, short-term rates will go up and come right back down, and maybe we sit between 4.5 to 5.5 for quite some period of time. So when you look at the TLT stock all the way down to 82, this is probably temporary. And I've kind of alluded to this, especially on my forum. I know I've gotten a couple questions on this. I see interest rates popping a little higher, then backing off within a 2-year period of time. So the 10-year yield isn't really necessarily going to move up too much and stay there. Then we start asking the question, well, what happens in 3 years? Where's the economy in 3 years? Maybe loose money policies are gone, but we keep things at an elevated rate, maybe 4.5%. That would mean TLT stock would move higher, because TLT stock is pricing in much higher interest rates right now. Interest rates are going to moderate at some point. But right now what we're dealing with is the Federal Reserve's temperament to sticky inflation. I think we've probably hit the bottom at 82. I think we probably move around, and maybe we get up to about 85 again on TLT stock. And a lot of sideways action from there. I don't expect to see a robust rally that we go back to loose money policies. Those days are gone. Federal Reserve has to contract its balance sheet to get itself back onto trendline growth with the economy to keep inflation in check. These higher interest rates are bringing more and more money into the U.S. economy. That is fueling the economy even further. So I see a lot of these moves as temporary, but then that the Federal Reserve will back things out, and then the dollar will probably sell off again. So there's something else you could probably consider long-term, going short the U.S. dollar index. But I think we've probably tapped out on TLT stock on its downside, and I expect a slow trickle higher and kind of moderation sideways for some period of time. I also expect that we've probably seen the loose money days gone, and so we're not going to see a rally in TLT stock way up to where it was. It was pushing 175, 185, some really high prices. Those days are gone as well. The Federal Reserve will likely keep interest rates at moderate levels and contract its balance sheet modestly, and because of that, TLT stock probably has bottomed out and will start to trend a little bit higher, then a lot of sideways movement. Then we're entirely data dependent from there. Make sure you hit that like and follow button. Thanks so much for following along on this channel. The links down below get you the free email newsletter. Every time I send out content, you'll keep in touch there, plus the website. See you in the next video.